Good afternoon, viewers. Welcome to Rishi Quant Research YouTube channel. The relative strength index has been always a pain point for the people. The use of relative strength index in the trading and investment is also subjective. It can be used in different manner, and the use of it changes from user to user. So today what we are going to do, we are going to analyze the relative strength index in depth. We are going to do a statistical analysis of the relative strength index. I will be sharing a screen with you. I will be showing a graphical results also of the relative strength index. Okay, so before that, the general convention of the RSI which we have been taught is when the RSI is below 20, it is oversold and wait for reversal, bullish reversal, trade a bullish reversal. If the RSI is above 60, it is overbought, wait for bearish reversal. That was the general convention which we have been taught. But does it really happen in that way, or do we take what we are told for granted? Let's see ourselves. We will dive deeper into the statistical analysis of relative strength index. This will be the first video of the playlist of RSI. We will be solving different problem statement of RSI in this series. Okay, so today's problem is analysis of RSI and next N candle returns. Let me share my screen. Yes, screen share. So this is today's problem statement. Analysis of RSI and next N candle return. What does that mean? That means if the RSI is 25, what are next 10 candle returns? If the RSI is say 50, what are next 10 candle returns? Okay, understand? So the 10 candle returns means returns at the end of 10th candle. It does not by any chance mean maximum returns during those 10 candles. No. Say today is the first candle and today the observation or the price is say 100. During next 10 candle it went to 200, and at the end of 10th candle it has come down to 120. What does that mean? So the N candle return, 10th candle return will be 20 points. Okay, it will not be 100 just because at its peak it went to 200. No, it will be 20. Okay, so that was the clarification. So let's define the scope of our data and scope of our study. Scope of the study, we will be studying Nifty 50 index. The time frame under study will be daily. Span of data will be 3rd April 2023 to 12th March 2026. Okay, so let's load some libraries, then load data and add RSI column. Okay, we have added RSI column in this. RSI, as you know, is a continuous numerical variable, so it can be 23.5, 44.9. It ranges from 0 to 100. Theoretically it ranges from 0 to 100. It never goes to 0 or 1 or 2 generally. So we will be converting that to in discrete steps. We will be converting that into a discrete steps of 10, multiples of 10, that is 10, 20, 30, 40, 50. So we can easily analyze. Okay, so what these steps means: 60, 70, 30, 20. When we say RSI is 60, that means in reality it can be from 55 to 65. In these observations it can be from 55 to 65. If it is 30, in reality it was from 25 to 35. It might be 25.7, it might be 32.7. so all those readings are taken as 30. Next, we will be setting a window, that is n candles. We will be studying next 10 candle returns, that why we are setting a window as 10. Third, we will be adding next 10 candle return in this. See, we have added next 10 candle. These return will be in absolute points. It will not be 0.25%, 0.5%, 1% like we see in the Nifty. No, it will be in absolute points. 226.3. What does that mean? That means from 3rd April 2023, at the end of 10th day from 3rd April 2023, the Nifty was 226.3 points above this. Okay, that what it means. So for the latest 10 days we will not be getting any readings. Because why? Because we are calculating next 10 days return, and for latest 9 days or 9 days, there the days available, next n days available are less than 10. That's why we are not getting any results. If you see next, you will see we will be dropping these and the observation will come down to 721. Next, now next 10 days return, we will be counting what statistical parameters we will be analyzing, that is mean, average, count, frequency of occurrences, standard deviation, that is variation, minimum, that is least observation, least reading observed, maximum, that is maximum reading observed during that. Let's go and see. RSI 20, return has been, mean returns has been 641. Mean returns for next 10 days has been 641 for all the observations combined. Mean of that all the observations combined, 641.33 points. Frequency has been 3, very rare. Standard deviation 230, minimum 384, max 824. That means returns has always been positive for the given span of data. Returns have always been positive when the RSI fell down to 15 to 25 for next 10 days. We will get this in a graphical manner and we can understand it better. Yes, this is the graphical manner. As you can see, what conclusions we can draw from this? Apparently, prima facie, what conclusions we can draw? RSI has been most of the time between 40 and 70, right? If we go conservatively, then RSI has always been between 40 and 70. If you want to be a more liberal, then you can say it has been between 30 and 70. Second, at 20, at its extreme, so RSI has been very rarely to 20 and RSI has been very rarely at 80. Okay, if we go here, mean returns, what you can understand this: when the RSI has been to 20, next 10 days returns have always been maximum for all the observations. 3 observations are there, so next 10 days returns have always been positive and mean has been maximum for all those observations. For 30 it is second highest, and from 40 to 70 or you may say to 80 it reduces drastically. What does that mean? That means when the RSI is as 40, 50, 60, 70, the mean returns for the given observations, the mean return has been very low, least for 70 has been very low. That means if the RSI has been, if you take all the observations when the RSI is at 40, calculate for those all observations next 10 days results, then there are variations, large variations in the observations on either side, so much so that you can see that here standard deviation is highest when the RSI is at 30 and 40. Standard deviation is highest for 40, then 30, then 50. Do you understand? That means when the RSI is at 30, 40 and 50, you get the observations, and the observations vary. Sometimes for next 10 days you will have extreme positive returns, sometimes you will have extreme negative returns. Okay, they cancel out each other and the mean is reduced. You cannot confidently say when the RSI is at 40 it will give you positive, as you can say that when the RSI were at 20. Okay, do you understand? Do you understand the variations here? Standard deviations. What do you mean by standard deviation? It tells you the variations in the observation across the mean. Okay, it tells you variation, gives you variation. So you will understand that in this table. See, for 40 the standard deviation has been highest. What does that mean? At 40 the mean is 100. Mean return is 100 for all the observations. Okay, but as you see, these are extreme readings you get. In some observations next 10 days returns has been 2000 almost points. In some in one observation it has been minus almost 1000 points. Okay, that adds to that causes this highest standard deviation. For 30 also you can see, in some observation next 10 days return, in one of the observation next 10 days return has been 2000, and if you go to less negative side it has been minus 672 when the RSI was 30. Okay, and when it is 20, you see the RSI is maximum 384, maximum 824, minimum 384. So when the RSI is at 20, you can safely give definite conclusions for the given span of data. For others you cannot. So let's go and we will try to find, yes, see, we will plot these observations, then you will have understanding. See, these are the observations when the RSI has been to 20. Just ignore these values, 475, 476, 477. These are just index, reference number of the observation. So observation indices, so ignore these values, or you can consider these at date. Okay, dates encoded. These are the dates observations, individual observation. See, when the RSI has been to 20, it has always given you next 10 days returns positive for the given span of data, whatever data we have defined above. When the RSI is at 30, next 10 days return pattern has been like this. Sometimes it is negative, sometimes it is positive. Highest has been to positive, and most of the time it has been positive. Okay, sometimes it has been almost zero. When the RSI is at 40, here you will see a balanced data. Sometimes returns of next 10 days candle are positive, sometimes are negative, sometimes positive, sometimes negative, as you can see in 50 also. Okay, same thing. Okay, 60, same thing, sometimes positive returns, sometimes negative returns, sometimes positive next 10 days returns, sometimes negative. As 70, sometimes positive, sometimes negative. And as we reach 80, most of the time they give you positive returns, but the last 3 observations has given you extreme negative results for next 10 days. Okay, we will calculate the empirical probabilities of positive gains also. Okay, so here are the empirical probabilities of gains in next 10 candles. So when the RSI is at 20, 100% of the time we have got the positive returns. What this give you? I'll tell you this. This will be better. Okay. Let's see. RSI 20. Historically, if you see for last 3 years, when the RSI was at 20, all 100% of the time it has give you a positive returns for next 10 days. When the RSI has been to 30, for 63.63% of the time it has given you positive returns for next 10 days. When the RSI is at 40, 53.33. So this is indecisive. When the RSI is at 40, this is the most indecisive. This one reading and this one reading. Okay. So contradictory to what we have been told, as you can see, when the RSI is at 60, the positive returns for next 10 days has probability of 55.36 only. Okay, so it is not like if the RSI reaches to 60, 80% of the time you will have a positive return for next 10 days. No, it doesn't work like that. 50, 60.57, 70, 62.99, 63%, 80, 66.66. Okay, so if you want to मोटा मोटी अगर इससे कुछ कंक्लूजन आप निकालना चाहते हो तो क्या निकाल सकते हो? लास्ट 3 साल में अगर RSI 20 पे पहुंचा है तो 100% ऑफ द टाइम इट हैज़ गिवन यू पॉजिटिव रिटर्न्स इन नेक्स्ट 10 डेज. व्हेन वो जब 70 पे पहुंचा था तो 63% ऑफ द टाइम इट हैज़ गिवन यू पॉजिटिव गेन्स फॉर नेक्स्ट 10 डेज. 80 पे जो पहुंचा था तो 66.66, ऑलमोस्ट 67% ऑफ द टाइम इट हैज़ गिवन यू positive results or positive returns for next 10 days. So, there are caveats to this analysis. Okay, what are the caveats? This study will change from time frame to time frame. Okay, of course this we have calculated for 1 day. If we change that time frame to now the bar plots will change all the way. Okay, this study will change from script to script. This is for Nifty 50. If you want to analyze for Reliance, it will be different. If you want to analyze for Tata Consumer, it will be different. All the charts will be different for different scripts. This study will change if you change the window of next n candle. Of course, this study we have done for next 10 days return. If you want to analyze for next 5 days return, you have to change that window to 5. Okay, that win parameter has to be changed to 5 and all the analysis will change. Okay, so it will be subject to the person's preference. Okay, you cannot do all the analysis. So what my intention is to let you know the potential of using Python to do a statistical and technical analysis of such kinds. Okay, just imagine if you can create a report for Nifty 50 just like this. If you create a report from 3 candles to 20 candles or 12 candles and show it to someone, or if you can use that to your reference, what kind of information you have? You will have a fabulous information, superb information. Your trading will be different. Of course, only using RSI in standalone manner in trading or investment is not advisable. We generally use combination of indicators, but that also we will be doing in later period. Okay, but to analyze the combined effect of different indicators, first you have to analyze the individual effect of the indicator. That's what this video is. It is the start of that series. The series name is RSI. After that we will be doing another series also on Bollinger Bands, candlestick patterns, chart patterns. Okay, you know, ADX, average directional index, and all those, super trend, maybe moving averages, EMAs also. We will be doing all kind of analysis. So this was the first problem statement. So let me know how this study has been useful to you and what different kind of problem statement you want me to solve, and I will come up with those. Okay, just share your experience in the comment section. If you like this video, please share this with your friend, like this video and subscribe to our channel. Thank you very much. Goodbye.